Good morning and a happy Independence to all of those who I didn't wish the day before yesterday. But we are entering the 7th and 9th year and it's pretty special. And the markets are rejoicing that as well globally, because if you just look at the mood of the US markets and what they did overnight, 2.5% in addition to the move day before, as well as Asia, which is having 2 days of a rally now, up about 3% for the Nikkei today. ASX, Shanghai, Kospi, all of the markets were in the green yesterday when we were shut, are in the green today. So I won't be surprised if we have a strong positive start in the session today. What's the news flow? Asian Pacific markets are tracking the Wall Street rally, are rising for the second day. US crude has rebounded 1% after falling for 2 consecutive days. So there's a bit of an uptick there, I would think. And China Central Bank has said that they see more growth steps, but nothing drastic. So for metals, it may not necessarily be the best of news, but be that as it may, global markets look okay, and the implied open, a strong 168-point uptake. In some sense, for the last 3 days, I've been saying that certain quant indicators are indicating that there is an upside possible, etc. And the markets weren't quite moving. Today, we're seeing the first draft of that. Maybe there could be more in store. Remember, the key point, we are closer to the Fed rate cut cycle than last week. I say this every single day for the last 2 weeks, that now that we know that the Fed is very likely going to cut rates, the closer we get to that cycle, I would reckon that the optimism around markets could actually get more. Because remember, more than anything else, it is the Fed action that has driven equities in the last 4 years post-COVID. Okay, what's the trade setup? Conflicting signals, if you will. There is high VIX and over 15 stocks in the F&O band, which essentially is a flag of concern. But more importantly, quant indicators are showing a high probability of an upside, and I would reckon that is what will show today more than anything else. There is significant open interest on the call side at 24,150, on the put side at 24,100. Now these would come in for a lot of unwinding if the markets were to move up higher and stay higher, which I think that will. And therefore, watch out for unwinding around these strikes and additional upside put pressure, if you will, on that. And from among sectors, I think the one sector that might sulk a little bit relative to others is auto, because the four-wheeler sector seems to be in a bit of a slow lane. MAC sell on rise. Today, on Editor's Cut, we are going to be talking in detail about the inventory rise at the four-wheeler space and what that could mean for that sector. Aside of that, I've been talking about NDTV Profit being the media partners for the MK Investor Conference. It was a big investor conference, 210 companies. And I think the one key takeaway that came in after all the 3 days is this: industrials are optimistic. Managements are preparing for extended growth period. In fact, from what MK says or tells us, companies are investing in fresh capacity as order book momentum continues. This is even conservative companies which are not doing that are now starting to do that. So keep an eye out for the industrial space in particular. Okay, now stocks to watch. Glenmark is the first one on my radar. Revenues are up 6.85% at 3,244 crores. The estimates were 3,295 crores. But margins expanded 18.13 versus 14.41. The estimated number was 18.2. And the PAT up 96% at 340 crores. The estimates were 313 crores. So it's turned out to be a fairly good performance by Glenmark. So keep that in mind. Capex is 1,700 crores. Target is double-digit PAT margins. So that's the other piece. And the India branded business for Glenmark outperformed the IPM at 11.9% versus 8.5% for the IPM side. So all the rest of the other pharma companies didn't do as well as Glenmark has. So watch out for this one, could react. Kappa side certainly could react. Revenues up 32%, strong showing there. Margins expanded 255 basis points. For such a company to expand margins by 255 basis points versus 16.39 at 18.94 is very strong. And as a result of which, the profit after tax number up 179% at 53.4 crores versus 19 crores. Look at these numbers. No surprise if the stock reacts positively. Pitti Engineering, revenues are up 32%. EBITDA margin was flat at about 14.74, but the net profit 21 crores versus 14 crores, or 50% uptick. Very likely could react today. Equinox is the other one. Revenues were up 98%. There was an EBITDA loss, but the EBITDA loss narrowed, as a result of which the net loss narrowed as well. There was an exceptional item the last time, but narrowing of the net loss, narrowing of the EBITDA loss, good sales numbers may react positively. Not quite sure of this one, but keep an eye out. Ola Electric is the other one. Again, similar numbers, right? Revenues did very well, but EBITDA loss and a PAT loss, and both of those narrowed versus the corresponding quarter. Not the net loss, but the EBITDA loss certainly. HSBC though says a buy with the target price of 140. They have initiated coverage. They believe that yes, the company is loss making, but there is regulatory support. The company owns the tech stack and they know how to do other maneuvers as well, as a result of which HSBC is constructive. My colleague Puneet will bring in a complete detail of this HSBC note a bit later on the platform as well as on social media handles. So you want to watch out for that one. Then Suntech Realty is the other one. Revenues at 316 versus 71 crores. EBITDA at 31 crores versus an EBITDA loss. Net profit at 23 crores versus a loss of 7 crores. Again, good numbers, could react. Entero Healthcare seemed okay. Revenues up 22%. Slightly ahead of estimates. EBITDA margin, marginally lower because it stayed steady at 2.8%. But the net profit number at 20.5 crores versus 6.4 crores. The estimates were 13 crores. Suffice to say, seems like Entero could have a decent number. Very strong acquisition pipeline as well. They have done some acquisitions which are margin accretive, blended margins in the range of 6 to 8% versus the current margins of 2.8%. So I would reckon that that Entero could have a good day. They are on track to achieve the guidance of 35 to 40% revenue growth. So watch out for that one. Then RHI Magnesita, revenues were down, but EBITDA margin was strong. Net profit as a result of which up 55%, in line with estimates, but a strong number. Watch out for this one. KNR Construction, revenues were soft, unlike Capacide, right? But margin performance was strong, as a result of which the bottom line performance looked okay. So watch out for this one. The big news of the day today, to my mind, not just about the P&L hit, but the next one. SBI and PNB, Karnataka orders departments to stop banking with SBI and PNB, alleging financial fraud. Now, there's a bit of a dark territory and unknown territory. We don't quite know how the reactions will be on these stocks. I suspect that there should be some bit of a sentimental negative because it's not very regular that you see a national PSU bank being banned by a state government. Vishy, my colleague, is going to be talking at length about this. Keep an eye, but I suspect that the stocks might correct a bit. Paras Defense could do well. Order win. Technocraft as a buyback at 4,500. Again, could do well because of the price. This one was up because of the results, by the way. The price is looking okay. And Citi, the stock was down for 4.5%, Hero MotoCorp. Citi has a buy rating still, but the target price has been cut to 5,800. Multiple reasons, including weak Q1. So watch out for Hero in the session today as well. All in all, expect a good start to trade. Let's see if we pick up from there. Thanks so much for tuning into the Trade Setup. Have a great weekend.